November 9, Michael Vaughn with Brian Acker. Brian, first question, is this a bear market?
It's a good
It
question.
feels like
It probably feels like it, but I've been in this business 25 years or more, and I've never seen a time where we're actually up. We've been up double digit in our U.S. fund, but let's say we're up, 6.5% as of yesterday, after a few brutal days. But people don't feel that they're up, and actually, when they come in and we present the results, they're pleasantly surprised that they're actually up. So it's the damnedest thing where people feel certainly not euphoric, but they, you can point to results. Yes, we are up. Our 3-year number, for instance, in the U.S. is up 12% compounded.
Yeah, off the low, yeah.
So you're just going, okay, that qualifies as a bull market, but people don't feel, certainly, it's a bull market.
Are you calling it a bull market?
I think when we look back, it is. It has certainly characteristics of a bull market, but I think once this fiscal cliff and stuff get resolved, it has a huge potential of being a bull market. So
okay, we're going to get to that. Now,
right.
How did we do in September?
September was great. I mean, we were flat, but the market, both Canada and the U.S., were down. So yeah, so we had a pretty good month, and Globe Fund thinks so as well. So yeah,
we've talked about Apple. How did Apple play in September?
Well, I blogged about Apple. It was a perfect sell for us, or at least a call for those investors to lighten up on Apple. Certainly it hit a high of about $700, a little over 700, and yeah, and it's corrected about 15%. It's now getting interesting. Certainly if it fell another, potentially another 10%, I think, or more, it would certainly be a great buy. So
that's how you're doing it. You trade around these.
I think you have to be opportunistic in this market, and that's what we are. And you add a little bit at the bottom of our zones if you follow what I write, and you add a little bit at the top of the zones. Keep in mind, Apple is 5% of the S&P weight, so that's the S&P 500. So whichever Apple does, I mean, the S&P is sure to follow. So it's the largest weight, sir.
Okay, bear market, bull market. There's always a crisis a day. That's why it feels like a bear market.
Right.
The crisis of the day is fiscal cliff. Obama re-elected, market goes down.
Look. Let's go a little bit of analogy here. Let's pretend we're in a canoe. So on one side of the canoe, we have the U.S. federal government, who is spending $1 trillion that they don't have a year. On the other side of the canoe, we've got corporations, we've got individuals, we've got state governments, we've got banks sitting on the other side with tons and tons of cash. These two sides have to go in the middle of the canoe. How do they do that? And what the fiscal cliff is about, keep in mind, if Obama does nothing, we resolve the fiscal deficit of the U.S. government.
Taxes go up, spending goes down.
There you go. So what we're going to argue about is how fast that happens.
Right.
How fast are we going to go to the middle of the canoe? Also, too, is if the U.S. solves that deficit, that $1 trillion deficit, does the other side start to spend? The corporations start to spend, et cetera. So this is why it's kind of interesting, but from my point of view, and I've blogged about this, is, hey, if nothing happens, I think it's the result that we want. It's just that it might happen too fast. Yeah. So that's what the fiscal cliff, it's a terrible name. Whoever invented that thing should go.
Journalist.
Yes, I'm sure. But that's what's going to happen, and we'll know by December 31st whether they come up with a deal or not. So.
Do you think Obama's second term is going to be more activist, more effective than the first?
Yeah, he may turn more left, which I don't think it's a bad thing in the U.S., but really, it has really nothing to do with a bull or bear market. It's this secular transformation of these imbalances from the U.S. government, the federal U.S. government, to everybody else. As I look at all the companies, certainly in our database and what we have in our portfolio, they are basically sitting on tons and tons of cash that have to be spent. Apple is ridiculous how much cash they have. If they return it to shareholders, if they can't, it's all locked in there. That's negative energy just sitting there. And for the next bull market, or for the next phase of the bull market, let's call it that, all that cash has to be spent and returned to shareholders, or something has to be done. And if that happens, valuations will go berserk. So we're in kind of a winter here with potential for spring and summer if we can unlock that cash. And a lot of it has to do with this fiscal cliff and how the government comes back into the center of the canoe.
Well, strangely enough, the investors' cash is going to the bond market.
Yeah, well, yeah, I mean, yeah. It was Sheila Blair has a book out, the former head of FDIC. She was actually on the comedy show, Bill Maher. Bill Maher said, okay, where's the bubble now? And she took 2 nanoseconds to say the bond market. Yeah. So everyone sees it. It's going to turn. And when it turns, it's going to be, there's going to be losses there. But, every day it doesn't turn. So again, that's part of this fiscal cliff. That's part of the rebalancing of the imbalances that are going on. And whether the actual, whether that happens quickly or whether that happens slowly, I'm not sure. But in this world where everyone has an iPhone or a BlackBerry and they can make decisions in a split decision, it'll be interesting to see what happens there.
Well, keep the results positive. It looks good, even if it doesn't feel good. Always interesting talking to you. See you in December.
Good to see you again, Michael. Thank you.